Where do I even begin this one? Well, perhaps with welcoming you all back on this wonderful Wednesday for what is going to be nothing short of another jam-packed daily market update, and we have got a hell of a lot to get into. We are going to start things off by looking at some news out of BlackRock and highlighting the fact that if every millionaire in the US asked their financial advisor to get them one Bitcoin, there wouldn't be enough. And on the topic of scarcity, I want to highlight to you guys just another billionaire that's actually investing in this technology. And we're talking about Ricardo Salinas, who, of course, is a Mexican billionaire. He's also one of many billionaires, like Ray Dalio, that are ultimately looking at Bitcoin as a true asset class. And this is tying in with the BlackRock news that we're going to cover. Because when they enabled an ETF, what they essentially did and are doing today is promote Bitcoin as a genuine asset to have within your portfolio, perhaps at least for the sake of diversification, which is what Ray Dalio talks about on the ALLIN podcast in his recent interview. And of course, that's not the Allincrypto podcast, that's the ALLIN podcast, previously headed up by David Sachs. But billionaires own this stuff, guys, and there's ultimately a plan for it. And it's only really retail that can't stomach the volatility because... And this is why we encourage people to be investors, not traders. When you have that bigger view, when you have that sort of bigger time frame view that we derive fundamentally and technically, it really is a pretty clear picture. But we'll play a clip of him talking about this. It really ties in well. And then we're going to talk about what's taking place on Friday, which is, of course, the summit. Howard Lutnick coming out and talking about how they're going to unveil the kind of reserve. He also mentions that Bitcoin's going to have kind of a special place and won't be treated like altcoins within this reserve. And then we're going to talk about some macro stuff. Yesterday, we highlighted what we thought was going to happen with the dollar. And we looked at what Julian Bittle put forward, which is a repeat of 2017. And we're actually going above and beyond that and saying, technically, there's merit for this. Bitcoin and the S&P look to be in the exact same position that they were at the start of 2017. And we're expecting this real asset bubble that's ultimately going to come up, or not bubble, run that's ultimately going to come on the back end of easing monetary policy. And there's a million and one reasons why they might want to do that. Right now, economic data is getting worse. That ultimately, in my opinion, is, and I think they're allowing that to do that, going to increase the probabilities and usher in that mandate of stimulating the economy. And we can ultimately look at that through that dollar scenario. And we'll talk about actually another factor, which is the fact that you have $7 trillion worth of debt to be refinanced this year. And then, interestingly, since places are lowering interest rates, you can see mortgage applications go through the roof. And somebody's sort of linking this to proof, actually, that asset bubbles and asset sort of runs are really created by central banking. And it's all one big game, guys. We try and sort of educate you on that game and help you with it. And then we'll finish things off with a little bit of price action. I think you've got a lot of manipulation going on now in regards to institutional games being played. But a lot to get into, guys. Let's get straight into it. First of all, this is a report from BlackRock. And really what they're highlighting here is the max supply of 21 million tokens, which we're yet to find out actually if that is the max supply. We want to be extra in this channel and give you guys, not just regurgitate the news, but also give you guys the ability to critically think about things. And the 21 million cap supply of Bitcoin is not hard capped. It's capped right now because the code says so, but that could be changed by the developers. Also, you could end up with forks and things like this. We're yet to see this 21 million Bitcoin hard cap really isn't a hard cap. It's just what's been agreed on at the moment. That could change. And actually with institutional sort of takeover of the cryptocurrency space, they're already the largest holder of Bitcoin, the US ETF offerers, and the majority of mining power is in the US. I think, perhaps, or it's certainly a large part of it, and they're ultimately all those companies are owned by institutions. So they absolutely have a plan for this, and that's why they enabled the ETF. And if you look at the journey that gold went on when it had its first ETF in 2004, and the S&P 500 was 1993, they had a little bit of a shaky start around that, and then they really went on these broad up trends. And I think that's to come for digital assets broadly, certainly with all their ETFs now likely being enabled. We already have an Ethereum one. There's more that are that's on 19B4 stages. But we are going to see the floodgates open in regards to that. And BlackRock are pushing this now, and it's becoming a staple part of a portfolio. And billionaires have front-run people largely. To illustrate how few Bitcoin there are, if every millionaire, this is from BlackRock, remember, in the US, asked their financial advisor to get them one Bitcoin, there wouldn't be enough. Now, that's interesting. You have the largest asset manager in the world essentially putting forward the argument for Bitcoin because of its scarcity, which is manufactured, I think. I don't think it's a true... It is a true scarcity until it isn't. You know, they could always up the BTC supply or they could fork the chain. And the reasons being is because there could have been an issue with it. Let's say something takes place, and there has been issues with Bitcoin previously, like a bug to essentially be able to mint unlimited Bitcoin that was found by a Bitcoin Cash developer. I don't quite know when that was. I want to say 2005, but I don't think so. 15, sorry, but I don't think so. So this is really interesting. Meanwhile, retail panicking. BlackRock's ultimately pushing this. And this is just the game that's played, unfortunately, guys. Major market manipulation taking place right now, I think. Let's listen to what Ricardo Salinas has to say in regards to his wealth and how it's allocated. And billionaires own this stuff, guys. Do not get shaken out. Let's dive into this.
You're well known as a crypto enthusiast most of the time.
Except on days like this.
What's your exposure now on crypto? Are you still all in or a little more cautious?
Well, all in because I have a lot of companies, right? So my source of wealth comes from my companies. We make money and they're valuable. But in my personal portfolio, the one that I manage myself and that I get to call in what asset I'm going to allocate to, yeah, I'm pretty much all in. I got about 70% in Bitcoin related exposure and 30% in gold and gold miners exposure. So 70-30. That's it. I don't have a single bond and I don't have any other stocks. Except my own.
Right. So on Bitcoin, I think we're down about 20% since the Trump inauguration after a big rally post-election. So buy the dip or wait?
Bitcoin, you have to think 10 years and buy everything that you can. It's not going to go anywhere except up because the dynamics are such. It's the hardest asset in the world. There's only 21 million of those tokens and 20 have been distributed and mined already. So there's going to be 1 million more from here to 2040, I think, 2140. So it's the hardest asset. Not even gold is this hard. Gold gets inflated at about 3% a year through additional production from mines. Bitcoin doesn't.
Actually, we don't potentially teach dollar cost average. We do when the time's right. So if you're in a cumulative range, what we look at as phase one, then sure. But you can be a little bit more intricate and capture market cyclical cycles on broader uptrends. And when you weigh sort of Bitcoin up against the big backdrop, which is continued deflation of currencies, it really is a perfect equation, despite me highlighting the fact that actually, and it is a fact, the hard cap on Bitcoin might not be a hard cap because actually it could be changed. No Bitcoin maximalist can actually genuinely say that there's only ever going to be 21 million Bitcoin. There could be a number of reasons why that might not be the case. And if you ask them, and really the way to solve this problem is there only ever going to be 21 million Bitcoin and could that be changed? If they say no to that, they're being disingenuous in my opinion. So really interesting. Billionaires own this stuff. Obviously retail panicking. But generally we're in a really, really good spot. Let's talk about Friday. So obviously we know that there's going to be the first ever White House Crypto Summit headed by David Sachs, with some of the prominent founders, CEOs, and investors in the cryptocurrency industry. I think Michael Saylor's going, my favorite Bitcoin maximalist. He has a PhD in technological gobbledygook. This is all ultimately going to be very interesting to see what comes out of this. There's news from Howard Lutnick that Trump to unveil Bitcoin reserve strategy at the White House Crypto Summit. What else have we got here? Justin, Commerce Secretary, says, and he owns a lot of Bitcoin, by the way. Is he a billionaire? Millionaire, at least. Owning a lot of Bitcoin. Commerce Secretary says President Trump will unveil Bitcoin reserve strategy at the White House Crypto Summit. Bitcoin to be treated differently from altcoins in the US crypto reserve. There's still outrage about it, says Howard Lutnick. The president definitely thinks that there's a Bitcoin strategic reserve. Commerce Secretary Lutnick told an outlet now, there will be questions of how do we handle other cryptocurrencies. And I think the model is going to be announced on Friday when we do that. So all eyes on Friday. We've got a Sunshine Act taking place tomorrow. Friday's going to be an insane day because we've got non-farm payrolls, key economic data that I look at. We might see a worsening in that, and I think they're allowing things to worsen, which is going to bring us perfectly on to the sort of macro environment that we think sees assets do very well, and certainly technically, what we have is confluence. Macroeconomically, we think things are going to do well for that kind of... Julian Bittle really laid down the 2017 style scenario, and we've now done work on that and actually think that's the most probable scenario, and it aligns with technically where the cryptocurrency space is, which we can look at in just a second. But Friday's going to be a big day. Non-farm payroll. We've got, obviously, the crypto summit. I think there's a number of other things going on. Let's now talk a little bit about macro. I know it's boring, guys, but it's very relevant. And part of what we do here is 360 analysis. Julian Bittle, interest rates are too high. This is from Trump. The last time Trump said this was too high, it was the dollar back in 2017, just days before his inauguration. Here's what he said. Our companies can't compete now because our currency is too strong and it's killing us. Last year, he also called recent strength a tremendous burden on the US businesses. Trump understands the impact of a strong dollar, and the same logic applies to high interest rates. They suppress exports, hurt corporate earnings, and slow economic growth. And that's at a time when economic growth is starting to slow down. I think it's deliberate. I think they're allowing this to happen. We're off to a bit of a shaky start, just like we were in 2017. And then they go, okay, we're going to start easing, which doesn't mean QE in the form of them buying bonds, but I think that's a likely scenario in regards to the Fed doing that, because who else is going to do so? You're about to lower interest rates, killing off that kind of free market element of raising the appeal. You've also got $7 trillion nearly in money market funds that will leave, or a large part of it will leave those money market funds, not all of it, because a lot of it's corporate, when interest rates start to come down. And you can see, where's this money going to go? I think we're looking at one of the biggest asset sort of runs. I don't want to use the word bubble, because everyone says, oh, this is overvalued, that's overvalued. Everything is overvalued compared to the monetary system. It's the great game. But what happened next? Well, the dollar began a significant decline, setting the stage for one of the most pivotal macro moves we've seen, triggering a melt-up in risk assets, deja vu. I hope so. Let's see how this plays out. And of course, we've done a lot of work. So not only are we expecting Bitcoin to go up, we're also expecting the dollar to come down in that kind of macro 2017 scenario. Look at this. This made our target, by the way. Giving all this away. Obviously, updated Patreons first. This textbook. Look at that target, Matt. And we're looking at a repeat of this. That ultimately is likely going to see the dollar come down here. And dollar assets are like seesaws. Let's look at what Scott Bessent had to say, kind of aligning with our macro view of everything. And then we'll proceed with the video and put a cap on it.
Congratulations again. We've been talking for about a year and a half about your visions on the economy so far. What do you want the president to include in his speech from your department?
Well, Brian, President previewed his speech with some of the cabinet members yesterday, and he's got so many accomplishments. On the economic side, I think thus far one of the biggest wins for the American people is since Election Day and since inauguration, mortgage rates have come down dramatically, both the level of the 10-year bond and the spread between the 10-year and mortgage rates, which I think is an effect of the bank deregulation we're going to do. So that, I anticipate.
Does that affect credit cards too?
Well, the interest rates will affect credit cards. It'll affect auto loans. And the bottom 50% of Americans over the past 2 years have gotten crushed by these high interest rates. So we're set on bringing interest rates down. And I think that's one of the great accomplishments so far.
And also, when you talk about energy, you guys are doing this, making it clearly a focus. Is the market looking at what you plan to do with energy and reacting on the promise of what you're doing? Because you've only been there, 7 weeks?
Yeah, so Brian, markets live in the future. There's a futures curve, and the market understands President Trump's plan for energy dominance. And the Secretary Burgum, Secretary Wright, the super strong members of the cabinet are following President Trump's priority for drilling, unleashing U.S. energy, crude oil, natural gas. We're going big in nuclear, and we are going to, it's going to bring down costs, but we're also going to become major exporters of energy, which will make the world more secure.
I think there's a combination there of things. We're looking at interest rates coming down. That's going to obviously lower the 2-year yield, the 10-year yield, which is why it's sort of pre-market selling off. And ultimately, that's ultimately going to weaken the dollar and see that 2017 scenario play out, which is going to do really well for risk assets. You also kind of, energy's low. I'm short oil right now, crude oil, and I have been for a long time. Been telling you guys about that. It's all ultimately filtering into this really good economic environment that I think we have ahead of us. He talks about sort of mortgage applications. This is interesting. We've seen a huge jump in mortgage applications. This is on the back end of obviously interest rates. Huge jump in mortgage applications. Interest rates have been falling. This is proof that rates and not housing supply is the root of the housing crisis. Inflation, period, is monetary because everything is... okay, yeah, there are microcosms, but generally, inflation is a monetary phenomenon. And this is interesting. This is another reason why they're going to want to bring things down. And they're kind of letting economic data you know, they're not rushing to make these changes, but more broadly, the trajectory that we have is a good one and sees these changes come in. Just stick to the plan, guys. For goodness sake, stop getting shaken out on every pullback. Stop giving yourself a heartache and you and your family a heartache. There's nothing worse than somebody that burdens. If you want to be a crypto investor, a bit of advice here. We don't give financial advice, but a bit of advice. Keep what you're doing separate from your family. Certainly on days when it's going belly up, because you're going to darken everybody's dawn with your own activities. Being a crypto investor isn't for everybody. It really is frustrating to me to see people so kind of downtrodden about being here. You don't need to be here. You don't need to be a cryptocurrency investor. Nobody's encouraging you to buy cryptocurrencies. Don't do it if you don't want to do it. If you see the merit in doing it and you believe that you can see an opportunity here, then of course that's yours to take. But be happy, guys, you know, and I'm speaking to a very small percent of you. We know you guys here on the channel day in, day out are, you know, as happy to be here as I am, and we love having you here, and thanks everyone for all the support. Lots of videos to come out later. Generally, we think the market is in a great space. We think both technically, not just for crypto, but more broadly, there's a good picture for risk coming. And of course, macroeconomically, we're looking at what's going to drive all that, and it has everything to do with monetary policy and the United States. And a kind of easing in regards to where monetary policy currently is. And they've got that room to do so, which is why I think they've been so sort of hesitant thus far. You see other central banks far lower now. That's it from me, guys. I'm going to love and leave you. See you all in the next one.